Hi guys and welcome. In this video we're going to show how the credit card companies classify their users, what the different types of customers are, and where you should find yourself, and what does it mean. Let's explain everything. You may not be aware of this, but bankers and financial experts classify credit card users into two types, revolvers and transactors. However, in this area, credit card companies look at their customers differently. The truth is, they classify their credit card customers into three distinct types. Let's talk about them. The first type is the revolver. Believe it or not, the credit card companies love this type of customer. In fact, if you fall under this type, you bet your credit card issuer would like you to keep you as a customer for as long as they can. Why do they love revolvers? It's quite simple. These customers provide the revenues for the card companies. You might say that they keep the issuers in business. The revolver is the type of customer who does not pay off his balance in full at the end of each month, so that he allows the interest to build up on the unpaid balances. Over time, the balance will increase in total and the cardholder eventually has to pay it. You can find revolvers all over the country. The diversity ranges from minimum wage earners to businessmen to high-powered financiers. It doesn't matter whether you're the kind of card user who buys a high-priced item on small-time budget or an online businessman who uses your card to purchase your inventory when there's a sale. If you carry a balance from month to month, or if you only pay the minimum or slightly over the minimum, you are still a revolver. We're not saying that it's necessarily bad to be a revolver. We just like to point out that revolvers ultimately end up paying more for the things they buy than most people do because of the additional interest on the credit. The second type we would like to discuss is the card hacker. Let's get this straight. We do not refer to a con artist, identity thief, or malicious computer prankster when we say card hacker. The card hacker is a creative cardholder who tries to outsmart the card companies by taking advantage of the offers to their hilt. One way is by opening two cards at once. The first one will be with big bonuses, double rewards in key categories, but with a very high APR. The second card will be bare bones rewards cards or one that offers zero interest balance transfer cards that has no interest for the first 12 months. Once the two cards are ready, the hacker will use the big rewards card to purchase merchandise worth a few $1,000s that they have already budgeted. It could be a state-of-the-art jacuzzi or a European holiday for the family. Then they quickly transfer this charge over to the card with low rates on balance transfers. Now you can see how it will play out for the hacker. He ends up with a huge stack of rewards from the first card. He's able to buy the big ticket item he wants and now has a full year to pay it off interest-free. This sounds easy, exciting, and perfectly legit. Yeah, but remember that it has its own risks. Before you attempt credit card hacking, remember that some cards will charge you a balance transfer fee for the privilege. If the fee is higher than the value of the rewards you get, you might end up losing money in the end. The last and most important credit card customer type is the deadbeat. Deadbeat here does not mean a person who doesn't pay his debt. In the credit card realm, they are quite the opposite. A deadbeat is actually a very responsible credit card holder who has a lot of positive financial sense. However, credit card companies don't make much money from the deadbeats, so they don't like them, and they call them with a negative name. Deadbeats practice a simple financial stewardship rule that benefits cardholders but leaves credit card companies frowning. This is the practice of paying the credit card bills in full every month. As far as they can help it, staunch deadbeats will never pay a single cent in interest to keep their credit cost as rock bottom as financially possible. Deadbeat is a cousin to the easygoing transactor. Transactors usually pay their balances in full and on time, but once in a while, they will allow a small amount of balance to remain from month to month. Deadbeats are financially responsible people. They are in control over their spending to only how much they can afford. Bargains, sales, and special promotions don't really appeal to them so much. You may be a deadbeat and you've noticed that you're not too popular among your family and friends because of your self-control. Don't let that affect you, because ultimately, when these people realize that they're paying a lot more than you are, you're going to have the last laugh. So why do companies consider credit card deadbeat? The lifeblood of credit card companies is the money that they collect from cardholders in the form of interest, fees, and other charges. Anytime you let your balance revolve by carrying it from one month to the next, you will have to pay interest and finance charges for the amount. Credit card companies love this kind of transaction. because they bring the real income and profits to the company. When you settle your balance in full each month, the card company does not collect interest, so they don't make so much money off of it. Of course, they earn from merchant fees they collect from the stores whenever you use your card, but that is minimal. That being said, you don't bring in great business to the credit card company, so they label you as a deadbeat. You can be a deadbeat or a transactor and save thousands of dollars in interest by following these tips. The first tip, don't carry a balance. By simply paying off your credit card balance every month or even twice a month, you can avoid paying interest charges. Some people pay the balance every time they get their paychecks. If your employer pays you every week and you immediately pay your balance when you get your weekly pay, that's a good discipline that will reap rewards. You will never be late, you'll improve your credit, never pay interest, and have an easily manageable debt. One good technique to make sure you never carry a balance on your credit card is to have a solid budget and stick to it. Here's 2 important things to remember when you make your budget. The first thing is to have a saving plan. Set aside some amount for things like a car breakdown, an emergency home repair, and a sudden out-of-pocket medical expense, because these things can demolish your budget. Another thing worth mentioning is to make a budget for things that you have a weakness for. You might believe that buying frivolous stuff is not a good financial stewardship practice, but some of us pursue a hobby of sorts, although others may call it a weakness, like buying the latest sunglasses, collecting comics, or pampering your pets. There must be a provision for these items in your budget, because you will torture yourself when you can't spend for them because you have no funds. Paying on time is essential to become a deadbeat. Credit card companies have a reputation for charging cardholders left and right fees, such as interest charges and late payment penalties. So, to avoid paying them, pay your balance on time. As we've said before, paying your balance every time you have the resources to do so should prevent any late stiff payment penalty and damage to your credit score. Good customers are always working on their credit history. Perhaps the simplest way to build a credit history is through credit cards. If you're still in college, don't worry, because a lot of card companies have credit card products that college students can easily qualify for. If you're getting a credit card because you want to build a credit history, then build a good one. One way is to pay your bill full every month. Over time, consistently doing it will result in a good credit score. Of course, managing your credit card responsibly is not the only way to build a good credit history. Whether you have a mortgage, an auto loan, or a personal loan from the bank, lenders will report your payments to the credit bureaus, and that will build your credit history. Even your gym membership can find its ways to your personal credit history to the credit bureaus. So even if you're late in your payment of the membership fee, you can hurt your credit score over such a small thing. Students or recent graduates are highly unlikely to have their own mortgage or car loans, so credit cards would be the easiest route for them to build their credit history. The other benefit of paying your card in full is that you also don't pay interest. That is totally different from a mortgage, where the lenders will charge you interest every month. Another very important recommendation is to have 2 to 3 cards maximum. Normally, an average person can comfortably live with 1 or 2 cards. If you're just establishing credit, we suggest that you just get 1 card. You may opt for a secured credit card, which banks will give if you have a corresponding deposit account with them. If you have a secured credit card, you offer your deposit as a security up to the amount of your credit limit as long as you use the card. When you choose a credit card, look for one that can give you rewards but does not charge an annual fee. If you have no choice but to get one with an annual fee, just make sure that the rewards outpace the fee. If you get more than 2 credit cards, you'll have a harder time tracking and managing all of them. You need to mind your credit utilization ratio. This is the proportion of your balance at the close of your billing cycle in relation to your total credit limit. According to Experian, you should try to keep your credit utilization rate at a 30% or below. You might damage your credit score if you go beyond that threshold. Credit scoring models would interpret a high credit utilization rate as a sign of possible overspending and irresponsible money management. Therefore, it is riskier. Last but not least is to know the T&C of your credit card. Yes, we know that the fine prints on your agreement are long, boring, and wordy, but you should read it anyway. Don't rush through, but read it. Understand the many provisions such as grace periods, late payments, interest rates, and interest escalation clauses in case of late payment. Would you have to pay additional fees if you spend over your limit? Is the interest rate different for a cash advance? Can you request for a waiver of the membership fee? Credit cards can be helpful and useful for managing your finances if you handle them well. They can help you consolidate regular multiple bills into one payment. You can link many recurring payments on your credit cards, such as your mobile phone bill, your various monthly subscriptions, and even your charitable donations. Most credit card issuers will let you pay online, and many will also let you arrange for your payment to automatically come from your deposit account. Disciplining yourself to be an intelligent consumer and knowing how to manage your credit card correctly will make you a deadbeat. Yes, the credit card company might dislike you, but we're pretty sure that your wallet will love you. That's it for now. On our website, you can find more posts as well as calculators and other financial tools. Are you a credit card deadbeat? We would love to know your thoughts and your story, so feel free to share them with us in the comments below. I hope you enjoyed this, and don't forget, subscribe to our channel on YouTube to get more free financial education videos.